All right, folks, here. Let's get started this morning. Again, my name is Bernard with Insurance Advisors Direct, and I am the life and annuity guy here. What we have today is the whole month of March, we've been talking about IULs and different concepts. And today we're going to be talking about long-term care, planning for long-term care, and different concepts that go along with that, maybe different products that can be used. First, we have Chris Scheifer with us. He's one of our valued life insurance partners, and he's going to go over planning for long-term care and how it fits more so for the agent to introduce that, or why you should offer that to your clients. With that, Chris, go ahead, my friend.
All right, thanks, Bernard. Am I able to be heard?
Yes, sir.
Okay, great. All right, everybody. So what I wanted to talk about today, again, is something that Bernard and myself have been preaching on for some time. Before I go through this presentation, I want to let you know this is a presentation designed to show prospects, okay? It's a presentation to be done in a setting where it's educational. And one of the things that I know Bernard has offered and I offer, of course, we have to get the timing right, but is the ability to do this for you. If each and every one of you can get 10 people that are willing to sit on a webinar and listen. Now, why is that advantageous to you? And why is it important for you? This is a situation where you're bringing your brand, you're bringing your knowledge to the forefront for people to understand stuff in a situation that's non-threatening. Am I still here? Can everybody still hear me?
Yep.
Okay, the picture here of everything just went away, Bernard. I'm sorry about that. I thought that I had disconnected. So I wanted each of you to know this, that when you're looking at this, please have a piece of paper to take notes. But what I would like for you to do is on the corner of that piece of paper right now, if each and every one of you can write the numbers 1 through 10, okay? I want you to write those numbers 1 through 10, and I want you to start filling out those numbers with names of people that come to your mind as I'm running through this presentation and as I'm talking to you about why you need to talk to your clients about this, okay? So the title as we see it here is Planning for Long-Term Care, What You Need to Know, okay? What I want you to know is that long-term care planning is crucial, but not just for what you think it's crucial for. It's crucial because long-term care can totally upend somebody's retirement. Think about this. Rarely are you going to have both a husband and wife have long-term care needs at the same time. Rarely are the husband and wife going to pass away at the same exact minute, okay? So what that means is a lot of times we're going to have somebody that needs long-term care, that needs some sort of care that falls into this realm while the other one doesn't. And what ultimately it means when people are getting this type of care, that usually ends up being towards the end of our life, and there's going to be somebody left behind. And we want to make sure that our clients are not leaving behind their significant other without enough money to continue to enjoy their retirement. Okay. So what really are we talking about, right? We're talking about why this needs to be considered for retirement. We're talking about why they need to just consider long-term care at all when it's needed. Okay. We need to talk to ourselves so that we can make sure that we understand when we talk to our clients. We can't pull the information out of the air. We do need a little bit of direction from them. What would they like to happen if a long-term care stay or an in-home person was needed? Okay. These are the things that help you when putting this together and putting it into their plan. So let's talk about something here, right? There's really two methods of long-term care. Okay. And when we look at these methods of long-term care, we got informal and formal assistance, right? This stuff's going to be able to be used, or it's going to end up being used if it's you or if it's one of your clients that are unable to perform 2 of 6 ADLs. And I do have a slide to go over the ADLs, okay? So when we talk about informal methods of care, we're talking about family, friends, members of the community, people at church, local charities, organizations, right? Something as little as Meals on Wheels bringing stuff over to you, okay? Formal methods, when we look at that, what are those? Assisted living facilities, nursing homes, qualified in-home care, right? Adult daycare. So let me go ahead and give you all a stat, okay? Because the next page I'm going to be talking about stats, or the next slide. This statistic is not on this slide, but here's the bottom line. It could be you on this call, okay? It could be somebody in your family. It could be a friend. It could be one of your clients. But here's the deal. 80% of all care is done at home in the first 2 years. Write that down. 80% of all care is done at home in the first 2 years. That's what the numbers show. Now, here's the kicker that I want everybody to know and understand, that for me, this is the big push as an advisor on why your clients need to make sure this is taken care of. The person that's taking care of you at home in those first 2 years is your oldest daughter or daughter-in-law. Doesn't mean always, but why is that impactful? Well, it's impactful because do you want your daughter to be seeing you in these compromising, things where you're at your weakest? Do you want your daughter to be taking care of you when she should be at work, helping to save money for her own retirement? Do you want your daughter taking care of you when she should be out there enjoying her life? Okay. See, folks, this doesn't just impact the person that's going into the nursing home or the person that's getting the in-home care. It affects the other part of the couple, and it affects the children. Again, why it's so important that you as an advisor are talking to your clients about this being part of their retirement plan. Now listen, 70% chance, right? If you're 65 years old today, you have a 70% chance of needing some type of long-term care services. That's basically 2 out of 3. If I was giving this presentation to a room of people, I'd tell them, look to your left, look to your right. Then there's you. 2 of you are going to have these services that are needed. Are you one of them? Okay. So you make it past that first year, 4.3 years is going to be the average amount of time that you'll be on claim. Do the math. Bernard, in the background, I'm going to ask you to do something and then maybe pipe in and tell us this. If you could pull your calculator up. If we have an average, okay, if we have an average cost, all right, let me show you something. Gosh darn it. Sorry, folks. I'm looking something up that I'm going to put on here. Okay. Bernard, can you nod at me? Can you see what I put on the screen? Okay. Detroit, Michigan area. All right, folks. Bernard, do me a favor. Can you take 4.3 years? Okay, so 24, 48, 49, 50, 51. 51, could you take $8,882 times 51? What's our number?
Said 8,000 what now?
8,882 times 51.
$452,982 or 982.
Folks, over $400,000 is the cost of staying in a home for the average amount of time. Now I get it. You're going to have some of this care done at home, the whole thing, but we're really not going to be getting that cut in half. right? So understand why it's so important to talk to your clients about this, because here's what it does. Even if they don't have that amount of money, the money they do have is going to disappear before the state will start paying for them. And if they do have that money, that's a big chunk of money gone that now the significant other that's left after this person passes away has a lot less money to live on for the rest of their life. 4.8 years, that's the average amount of time somebody with Alzheimer's will live. Some people live as long as 20 years with Alzheimer's, okay? The impact is huge. You need to talk to your clients about it. You need to make sure that they understand and ask these questions, right? How's it going to affect my family? What's going to happen to my retirement and my spouse? Where should I consider receiving this care? What is the cost? What are my options? There's a lot of options, but the bottom line is they have to plan for it, and it's up to you to talk to them about it. So when we're talking about a family, right? Okay, it's important to begin thinking about this plan and how it's going to affect them, right? We need to make sure we know how it's going to affect them. Have we dedicated a part of the portfolio, an asset? Do we have insurance to cover this stuff, right? When we look at informal care, who's going to provide it? When we look at formal care, who's going to process the paperwork and everything? Who's going to oversee it? Okay? There's a lot of things to think about. If they say, hey, I set aside money for this, is that money going to be taxed? Is the money in the market? Could it happen to be in a down market? Okay. What's going to happen with that? These are things that they need to think about. A lot of the stuff, I know I'm talking ahead of myself here because I'm kind of trying to get through this a bit so that we could do a question and answer. But, you know, we got homemaker services, adult daycare, assisted living, nursing home. Remember this, above all of it, 80% of all care in the first 2 years is given by your oldest daughter or daughter-in-law. After that, it's just the oldest child. Okay? Hopefully you all can see where some of these problems can arise. Now, when we look at the options, right? Medicare, Medicaid. Listen, I think for Medicare to pay anything, I think, and I'm not an expert on this, but I think you have to be in the hospital first. I think there's an elimination period. I could be wrong. And I think it'll then cover like 10 days. Could be wrong. Again, Bernard might know more about that than me. You guys might all know more about that than me. But here's the bottom line. They're also, when it comes to Medicaid, right? That's where we have a spend down. Your assets are going to have to be 100% used dollar for dollar to cover your care until you're broke. And then the state will pay for you. Yeah, sure, you could keep a car, a home, and like 100 grand for that person that's left behind. But is that person left behind going to be able to have that retirement that he or she wanted? Are they going to be able to see the grandkids, travel around and see things? Are they going to be able to do that? I don't know. What I do know is this, each and every one of you on this call can talk to your clients and you can make sure that they know the answer to that question. Okay? Understand when it comes to self-funding, I went over this a little bit already with you guys. All right, so self-funding, if you require long-term care, what does that mean? It means you're taking money from these spots, dollar for dollar, paying taxes, selling into down markets. Are you able to sell that real estate? Okay, hopefully you can see what some of those problems are. So when we look at the options when it comes to insurance, to sort of take the risk off the table, and this is what I often say, let's take the risk off the table. You could look at traditional life or long-term care insurance, which really isn't used that often today. That's a use it or lose it big problem right there. What Bernard works a lot with, I've seen him with a lot of the reps over there at IAD are talking about life insurance with the long-term care rider or the chronic illness, okay? Here's what happens. You could use that for formal or informal, okay? The premium's flexible and it's guaranteed. Traditional long-term care, one of the things I said, that's not guaranteed. Those premiums go up. Another option you have is linked benefits plans like Lincoln Money Guard and some of the other things as such. So let's go through and look at some of this. When we look at traditional long-term care, if you have a long-term care stay, you're going to get a benefit. That's that. If you don't have a long-term care stay, all the money you paid is gone. Use it or lose it. When we look at life insurance, if you have a long-term care stay, the bucket of money that you bought pays for it. If you pass away, there's a death benefit. It's not use it or lose it. You get your money back. Linked benefit plans, if you need LTC, it's there. You pass away, you get all your money back. If your needs change or you decide you don't want it, there's a return to premium, or some might not always be 100%. That's why the buckets get smaller. All right, folks. So what are the next steps, right? What do we want to push our clients, our prospects, those that we talk to think about? Well, we want them to think about what they want to happen. Write it down. We want them to talk to you. We want them to plan for how they're going to fund this, right? And what are the solutions? What do they want? All right, guys and ladies, I know today I kind of just stepped through that quickly because I sort of wanted to, I was hoping today we might be able to open this up and have more question and answer, because what I wanted you all to see here was really the bottom line is long-term care is crucial, but don't think of it as some sort of, we're just getting this for you to go stay in some stale place that you can be taken care of, lay around for a few years and then pass away. I want you to think about this as being something that's liberating, something that brings flexibility to your client's retirement, something that allows them the ability to take more risk with their other assets to get bigger returns. I want you to think of this as something that allows them to not disinherit their children and grandchildren, if that's a thing. This is something to make sure that their spouse, no matter what, is taken care of. It's a crucial cornerstone to every plan. And for most of you today on this call, when you're talking to people, I'm going to tell you, as much as this sounds crazy, but it's negligent to not bring up their strategy to take care of this. And that is how you talk to people. What is your strategy to take care of your long-term care needs and to make sure that your significant others are not devastated by the financial impact of that? And most people are going to say, I've done nothing. They're going to say, I got long-term care at work, or I bought a long-term care policy. We can work with that. Bernard will help navigate those waters for you or with you. So what do we got on questions, folks? I know there's got to be some, and hopefully through this thing, whichever one of you has the most of those 10 names filled out, let us know, and you'll be the first one that we'll run a webinar for to help you make some money.
So what I'm going to do, folks, here, I'm going to open it up, and so you can actually ask the question instead of having to type it in. Oh, go ahead, Kabu. I think, go ahead, Kabu.
Good morning, Chris, and good morning, Bernard. Thank you. Chris, I have a question because this has come up a couple of times when I had talked to my folks regarding the long-term care. Now, is this okay, or is this still valid when somebody living in the US who's a US citizen moved to a different country at that time, living there? Now, and then if they have to go through the same issues and they have to pay for healthcare services or care as far as like long-term care or anything, is that still valid? Can they use those dollars to do that?
Great question. Great question. And I've been asked this before, and I'm going to tell you that when it comes to that, there's a limited amount of companies that actually will allow their policy to work in other countries.
Oh, okay.
So yeah, it can, but it's very, very important when you're talking with people that it's known where they might be going and the whole thing. I want to let you know it's not always easy. Okay. They
Yeah.
have to have a board certified legitimate doctor, even here in the US, certify them as needing the care. And those doctors, when in another country, they have to, I mean, we could go through this a little bit more and get some of these answers. And Bernard, you could send this out to people if that's an issue, but
Mhm.
it is something that can be done. Okay. It's something that can be done, but not every company does it. I'll tell you, just the other day was asked this question of Protective. Protective will pay in another country, but you have to be certified by an American doctor that you need the care.
Well, that's going to be difficult, right? Because you're not going to have an American board certified doctor anywhere else in the world who's there to do that.
Yeah, exactly. Unless you're in
Yeah.
Canada or Mexico, or
Yeah.
unless you have the ability to come back to the US, or unless it's before you're going, you get certified. Yeah, I mean, that's what I'm saying. That's why you need to make sure it's the right company that you're using.
Mhm.
And there are a few that have the ability for that stuff to get done. We'll just have to talk about it if that time arises, or if that client arises. Okay.
Yeah. Because this is a very important deciding factor for many of my clients, because they ask me this. And then if we are not able to give them an answer, or if it's not going to work, then they do not want to do that, because this is a lot of money. And then, but I have another question though, actually, in the same lines. If this doctor in the US certifies, let's say somebody is diagnosed with Alzheimer's, okay, and
Mm-hmm.
they do need the care, and this is what it's going to be, but they are going to go to India to be there with more support, okay. Now, in that case, are will the insurance companies be looking for direct receipts of care, or is it something like the doctor in the US certified that this person's got Alzheimer's and they need this care, okay,
Mm-hmm.
can it be provided anywhere else?
Yeah, it can be provided. So as far as receipts go, again, that's going to come down to the type of policy, right? So
Okay.
if you have a traditional long-term care policy, that's called reimbursement, and they're going to
Mm-hmm.
require that there's receipts, okay?
Okay.
If
Okay.
you have a policy like, say, one through Protective, and I'm just using that because I said it, that's indemnity style. What
Mhm.
that means is you don't need receipts. You just need the doctor to say 2 of 6 ADLs, you're
Uh-huh.
certified, and they will then just send you the money on a monthly basis. Okay. And that's that.
Okay. Okay. So, and that's called indemnity basis, correct? Is that what you said?
Indemnity, yes.
Okay. Thank you. That
Uh-huh.
helps.
And back to your other thing that you said, right? On some of these life policies, for everybody on here to know that have long-term care or chronic illness type riders, the one thing that's really neat, if you know that you have a client who possibly could be moving overseas when they retire, okay, you could still buy the policy for them, and you could still have that long-term care or chronic illness on there. Oh, excuse me. I'm sorry, everybody. Now, what you could do is this. Depending on when they buy this policy, these
Mhm.
policies are going to grow cash value. Okay. And you could look at it as, hey, I got you the protection early on in this contract that if you need a nursing home or something comes into play, we have the ability to use this value for that right now. But if you get to the back end on this policy, and let's say we're out 20 some years, and now this policy that you bought, let's just say you bought a policy for 200, let's just say you bought one for 300,000, right? So when you have the rider, that rider is going to allow you the ability to have $300,000 long-term care. Well, let's go out 20 years, 25 years. You've now moved to, in your case, India. And let's just say your client's policy has $300,000 of cash in it now. Okay.
Mhm. Mhm.
The death benefit's grown to 450. It's got 300,000 in cash. Here's the deal. you could get that cash whenever you want, right? You don't have to use the long-term care or chronic illness rider,
Mhm.
because at this point, the cash value is just as much as that rider is. Okay. The only advantageous part of the rider is that we know it's 100% tax free. But when you pull cash out of a life insurance policy, as long as that policy stays in force, that's tax free as well. So, Kapu, remember when you are talking with folks that are worried about this and asking about this, the first thing is not to say, let me go check on it. The first thing is to say, yes, there's options for you to do this. You need to do this, because the worst thing that somebody could do is nothing
Mhm.
if it's actually a concern. Okay.
Right. Okay. So you mean to say you surrender the policy, or you're just taking like a cash value? You're taking a loan of the cash value.
Yeah, just take a loan, because then you actually have the ability, if you want to keep the policy, you can pay that back and keep the death benefit in force and do everything that you want to do, right? Not that you have to, you don't have to, but
Yeah.
what does it matter if you get 300,000 from the rider, or you take 300,000 from the cash? You're getting the same thing.
Okay, I have a question.
Yeah.
What is the age limit when someone can take out? Is there a cutoff? So if I have an aunt that's like 75, is there like a cutoff before she can get? I know it's going to be more expensive the older you are, but I just need to know the range that we're working with.
Well, so when's the cutoff to buy a policy? Is that what you're saying?
Correct.
Yeah, so 75 is going to be really, you're cutting the nubbins on that one to be able to get a policy with long-term care. If that's something you want, get the information to Bernard and we'll start shopping it for you to see what's available. Okay.
Okay.
Some companies, and again, I'm going off the top of my head, so don't take this as the gospel, but some companies it might be 70. But I do believe there might be some stuff at 75. Okay. Just have to check.
Gotcha. Okay. And then also in terms of contracting with Insurance Advisors Direct, what's the process for that? Is that something Bernard could send me?
Bernard takes care of that
Yeah.
for you, and he does a great job.
Okay, great. I believe you have my email in the when I registered, Bernard. Thank you so
Yes,
much.
ma'am. Mhm.
Thank you.
Thank you. We have one question from Warren. It's like, are there methods to do a long-term care? Are there methods to do a long-term care program after a person is retired?
Yeah. Just have to fall within those age range, right? I mean, a lot of people do it at that time.
Yeah.
Kind of if everybody here wants to know what's the ideal time, I say whenever somebody's willing to start doing this, because the more you could save and put aside to get leverage dollars, the more you're going to get. But a lot of times people are doing this, they really, really start looking at it 50 to 65 years old. Now, it doesn't mean that you can't do it. I got a rep in New Jersey that does it all the time on people that are 67, 68, 70, stuff like that. So it just all depends. But yeah.
Right. And then for a lot of, folks here that are the Medicare agents, when you are those folks that are turning 65, when you're just discussing their options, when you're not really going into an actual plan, here's a perfect time to start talking about the long-term care needs as it relates to Medicare as well. All right, folks, no, go ahead.
Is there another question? Is that what you were going to say, Bernard?
No, I was just going to say, take us up on that offer to run your virtual seminars for you. Actually, we have one going on tomorrow, Thursday evening for one of the agents, and look like it might be a pretty good turnout for her. So yeah, that's something that we're willing to do. If we have, just let us know your time frame to see if it fits with ours. And on my end, IAD will use our Zoom platform. We will create the invitations if you need it. And all you have to do is just send it out to your folks. And you'll be good to go.
Hey, Bernard, go ahead, ask your question. I think that was Kapu.
Yeah, sorry. No, well, do you do it over the weekends?
Do what over the weekends?
The seminars, the webinars, sorry.
Kapoo, I'll tell you, if it's me,
Uh-huh. Mm-hmm.
one, I need to have a lot of time in advance, and two, I will only do it Saturday mornings. I can tell you that there. I'm done by my time,
Okay.
noon.
Noon.
Yep.
Okay.
Yep, and that's pretty
Meaning
much the same.
I'm not saying I'm going to do it at noon. I'm saying like my computer's shut off and I'm walking out of my office at noon. So I kind of am like, would like to do it 9, 10 o'clock in the morning, my time. And remember, I'm Central Time. So
Oh, you Central Time. Okay.
Yeah.
Okay.
Yep. And like I said, that pretty much go for me. My Saturdays are always booked in the afternoon. So. Yeah.
So can this presentation be personalized for me? Because I know what I'm trying to do. This is like a group of seniors.
Yes. Yeah.
I could do this myself, but
Mhm.
this presentation, that's possible, Jim Bernard?
Yeah. Actually, with this presentation, it has the little scripts at the bottom. I mean, you all can't see it, but there are little a script at the bottom for each slide that you can use with your.
Okay, perfect. Okay, all right, then. Thanks.
Yeah.
So before we go, Bernard, I did want to show everybody one more thing, a couple other things real quick, okay? Just to make sure that everybody can see this. Give me a second. I'm pulling some stuff up to show what Bernard has available with this, okay? So there is a consumer handout, all right? So this is something that, Bernard, let me know if you could see what I'm pulling on the screen.
Yeah. Yep.
So there's a consumer handout that you could use. I do not suggest just willy-nilly handing this out. This is more designed to help you present the topics to everybody, okay? And you could have it with your name and everything on there. After we do the webinar that we do, the educational event, there's a follow-up sheet to set an appointment with them and do things. Bernard and myself, again, would show you exactly how to go about and using this, because the true matter is this is not used to send to somebody and to cross your fingers that they're going to send it back. This is used to send to somebody, realizing if you have 10 people on a call, you're probably going to get no one that sends it back. If you do 2 or 3 of these events and we have 30 people, you might get 1 or 2 out of 30 that get sent back. This is really a piece for you all to be able to call and ask the person, hey, you got the evaluation sheet. Would you please follow up and get that back to me? Okay. It's a reason for you to call them. The other thing that Bernard's going to have available for you, okay, is a is an invite that you could do, an e-invite for a webinar. Okay, that's something that's available. I don't know why that came up on my screen differently. And then something else that Bernard can get to you is some prospecting letters that you could turn into emails that you could mail to people, that you could use yourself to put on social media. There's facts, there's things. I'm not real big on the whole idea of letters today, but it is sort of cheap advertising. If you send it out to a bunch of people, right? I mean, you got to pay for the postage, but if you figure, I don't know what a roll of stamps costs, but you know, you spend 30, 40 bucks on a roll of stamps or 50 bucks on a roll of stamps, whatever the heck the cost is today, and you send out 100 letters to people, that's pretty cheap advertising to try to get in front of some folks, right? And to get some traction, and you know, there's that. So everything is put together for you to truly be able to do this, okay? Now, the last thing that I would like for each of you to see is, what does it mean? What does it look like? Okay, Bernard, can we see the screen?
Yep.
What does it look like, right? What does it mean? This is not what all the products are, but this is the Secure Care 3 with Securian. This is an asset-based product, cash indemnity. You can see it right there. But what I really wanted to get across to you all here is this right here is a $100,000 single premium. Don't worry about that amount of money, okay? There's different amounts that could be done, but the big thing that I want you to do when you're talking to people is understand this. On a 65-year-old female, a $100,000 lump sum turns into $337,000 right off the bat. That, my friend, is the leverage. Bernard, when you were adding up those years of 4.3, what was that number? It was over 400,000, right?
Yeah, 450 plus thousand.
So let's talk about this, everybody. Let's talk about this. $337,000 day one is not fully covering the 400,000. But here's the thing: without this plan, your client will pay $440,000. With this plan, your client will pay $100,000. They get $337,000 right off the bat. In 20 years, that has grown with inflation to $609,000. And that inflation works each and every month, even when you go on claim. So the point I'm making is what you could see is I made this as simple as possible to see how leveraging these dollars, you basically are going to turn $1 into $3 when you get a program for your clients. Okay? Understand that. So when you're talking to people, talk to them. Do they really want to pay dollar for dollar, or would they like to leverage the money? Do they really want to pay dollar for dollar and have to pay taxes on the money that they're using, or would they rather leverage the money and have it be tax-free? Do they really want to pay dollar for dollar, pay taxes on the money, and worry about the stock market or the real estate market on where that's going to be when they need the money? Or would they rather just leverage it and take that off the table and put all the risk on the insurance company to make sure that what they're saying is going to happen happens? So hopefully that makes sense to everybody here, and you can see why this is so important. And again, don't get hung up on this 100,000 with this particular policy. We could do less than that. You probably could go down. I don't know how low you could go, but there is going to be a minimum amount, but you could go down from that. And also, if they don't have a single premium, you could pay this as a 5, 7, 10, or 15 pay option as well. Okay. So hopefully that helps everybody to get a little bit of idea about how this fits in with retirement planning and protects people.
So I have a quick question, Chris. Is this only a long-term care plan? This has got nothing, no attached. It's not a long-term care rider.
Yeah, no, this is I did this. This is the asset base that looks a lot more like long-term care. Okay. There's a lot more to it. I wasn't showing it to you, but here's the deal. Your client puts in 100,000. The death benefit's 104. So if they die and don't use it, there is you can see there's hardly any leverage for death benefit, but you get all your money back, right?
Right.
Where traditional long-term care, if you put in 100,000 over how many years, it would just be gone. All right. And then there is some semblance of a return of premium. This one's not designed to give you a full return of premium, but you could see if you decide you don't want it at some point down the line, you get some of your money back. Okay. So, and over here, this is just showing 3% compounding. You could go up to 5%, but it's showing the money growing there. Okay.
All right. So is this also like an index based on an index like our index IUL?
No, nope, nothing like that at all. They're just going to give it 3%, and that's that. You put in 100,000, you get 337 off the bat, and it grows at 3%. If you die, you get 104,000. If you decide you don't want it, you get clean cut right there. That's that.
Oh, okay.
But again, there are different policies where it is IULs, like you know them to be, Kapoo, that have a rider on there. I just wanted to show this to everybody on the call, how simple some of these things could be. And then if you look at the back here, you can see the one I did was this one for 6 years. You could do a 4-year, 5-year, 6-year, 7-year, 8-year benefit. You could do 3% simple compound, 5% simple or compound. Lots of different options that are there. Okay.
And this is guaranteed 3%?
Yep.
It's guaranteed, correct? Okay.
Yep. Okay.
All right. All right. Chris, my friend, as always, appreciate you. Folks, I will be reaching out to everyone to, go over this, discuss this, see where you're at. If you have any cases, if you want to move forward with the seminars on how we can set it up for you, contracting, the whole 9 yards, I'll be giving you a call today. If not, please reach out to me. But yeah, 9 times out of 10, you'll get a call from me this afternoon. So with that said, everyone, if you're here in the Detroit area, please enjoy your rainy day today. Chris, again, thank you. And my motto is that let's push this forward, let's move forward and do the best we can for our clients, because at the end of the day, that's what we do. So
Thank you so much.
all right, folks.
Thank you.
Thank you very much.
All right. Take care, everyone.
Take
Bye-bye.
care. Bye-bye.